Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings so you don't have to. And this time we are diving deep into Mr. Cooper Group's proxy statement. Get ready to learn how they're rewarding their top dogs because this report might just make you want to apply for CEO. This isn't just another boring document, it's a sneak peek into how Mr. Cooper Group plans to run things next year, who's on the board, and most importantly, how much the executives are getting paid. We will focus on all the interesting parts and skip the rest. First off, stockholders get to vote on some important stuff at the annual meeting. They'll be choosing the board of directors, giving an advisory vote on executive compensation, that's the say on pay, and deciding how often they want that vote to happen. Every year, 2 years, or 3. Plus they get to ratify or approve who the independent auditors will be. These votes give shareholders a real say in how the company is run. Mr. Cooper Group had a stellar year with after-tax income reaching $669 million. The company saw an increase in their return on equity. Book value also went up, their stock price also jumped 47%, beating other similar companies. They also grew their servicing portfolio by a huge 57%, making them the largest servicer in the country. One of the key moves was buying Flagstar's mortgage operations. Growing Tefez video, we're going to be going through Harvey Chow's mortgage operations, growing their scale and solidifying their lead in the market. Check this out, Mr. Cooper Group isn't just keeping pace, they're blowing past the competition. Their total shareholder return, that's how much money investors made, has been way better than their peers over the past 1, 3, and 5 years. This tells us that their strategies are working and investors are seeing real returns. Let's peek at the board of directors, the people steering the ship. They've got a mix of skills from financial expertise to tech know-how, risk management experience, and even some marketing talent. This mix helps them make smart decisions and keep the company on track. They want people who understand the company, the market, but also public companies in general. It is important to keep the people in charge fresh, so we can see that they added 3 new directors since 2020. This is the company demonstrating that they do not become old and stale and are willing to bring in new people. Time for the juicy part, executive pay. The company wants to pay their executives to increase the money of the stockholders, attract and keep talented people, and keep the costs reasonable. They also are trying to move away from simple cash rewards to a compensation program with defined financial goals, which is more transparent. The company talked with stockholders, investors, and analysts throughout the year and got some feedback from them, and are using that feedback to improve their company structure, design, and pay. They did not just do this in a checkbox way, but also reached out to stockholders who voted against their executive pay plan to hear from them. Moving on to the corporate governance section, stockholders will vote to elect 7 directors. These folks will serve for 1-year terms. The board is mostly independent. Each nominee brings something to the table, like financial experience or strategic planning skills. Mr. Cooper Group believes that good corporate governance leads to success. They highlight things like stockholder right to call meetings, independent directors, an independent lead director, and annual say-on-pay votes. This is all meant to show they're serious about running the company the right way. The company does annual reviews of the people that oversee different parts of the company. That way, the people that manage different parts of the business can be swapped out for better performance and experience. The board is pretty involved in managing risks. They look at the strategic plans and figure out what could go wrong, from cybersecurity to data privacy. They also make sure the company follows all the important rules and regulations. In today's world, data security is really important. The board gets frequent reports to make sure information is safe. The Audit and Risk Committee checks cybersecurity, and management is always on the lookout for new threats. They are trying to do things in a friendly way. They use less paper, are energy efficient, and encourage remote work. For their workers, they are working on culture and opportunities to grow, and they also donate to the local community. They hired a senior vice president to run corporate development. She will be in charge of innovation and technology. She has held various leadership roles such as VP at Square Inc., VP at Lynda.com, and many more. The chair of the compensation committee, Tagar Olson, wrote a letter explaining the past year and future plans. Here's where it gets interesting, the compensation discussion and analysis. This part breaks down how the company pays its top executives. We're talking about base salaries, bonuses, and stock awards. They want to motivate the people in charge, reward them for doing well, and keep them from jumping ship to another company. In 2024, they changed how bonuses were calculated based on feedback from stockholders. They heard the message people were not happy with the high executive compensation and took some action. As such, they reached out to some major holders of the stock. This is something that all companies do. A major topic was that the company said they would not pay one-time awards to their CEO. For how they calculate awards, the compensation committee creates a goal setting and strategic objective process for them to follow so that bonuses are predictable. For the long term, the people who remain in the company for the long term get rewarded. They get rewarded with stock options that are tied to 3-year performance periods. They are using Korn Ferry, an outside company, to be an advisor for compensation. Korn Ferry provided the committee and executives advice. For this kind of pay, they are comparing themselves to Loan Depot, rocket companies, Zillow, and similar financial services to see how they stack up. Stockholders have an opportunity to give non-binding feedback on whether they approve of how executives are being paid. Shareholders also vote whether they want to have this executive approval vote every 1, 2, or 3 years. They are asking stockholders to approve Ernst & Young as their independent registered public accounting firm. Ernst & Young were paid about $7.6 million for their work in 2024. Most of it was for audits, and a small amount was for taxes. Looking at who owns the most stock, we see BlackRock and the Vanguard Group are the biggest shareholders. They are not part of the company. They are investment firms that manage money for other people. For a company their size, there weren't any major issues approaching. So what's the story here? Mr. Cooper Group had a great year. They're making money, growing their business and trying to keep their stockholders happy. The company does seem to be taking feedback from their stakeholders and trying to address their concerns with compensation. On the positive side, this company has great leadership that has proven themselves. Their weakness seems to be the risk of relying too much on executives and the changing interest rates. Overall, Mr. Cooper Group is in a solid position, but they need to keep a close eye on those risks and make sure they are keeping stockholders happy, which it seems like they are trying to do. Thanks for watching Corporate Decoder. Be sure to like, comment, and subscribe if you want to see us decode more companies.